The question about the high-tech stocks and possible fallout. Anytime there have been real bursts of speculation in the market, it does get corrected eventually. Ben Graham was right when he said that in the short run it's a voting machine, in the long run it's a weighing machine. Sooner or later, the amount of cash that a business can disgorge in the future governs the value it has, that the stock commands in the market. But it can take a long time.
First, more on our top story. NASDAQ 5000, America's favorite stock index, closed above 5K for the first time today.
Priceline.com is the latest beneficiary of the internet stock craze. Shares of the internet commerce company debuted at $16. They closed at $69, a rise of over 330%.
Earth Web was up 379%, and the Globe.com, which only traded one day, gained 606% on the week.
In tonight's Moneyline Movers, cash flow up 102 3/8 in its stock market debut. The networking equipment maker enjoyed one of the best opening days ever. The stock trading at 5 times its offering price.
Akamai is Hawaiian for cool. Technology company soared more than 450%.
The stock that stole the show today is called Free Market. Public today selling shares to the public, and take a look at what the stock did, up 482% or so.
The kind of valuations that were going on and the kind of trading that was happening in public markets, it's really fueled by what you would call the greater fool theory. In other words, there has to be a greater fool than you that buys it, or the whole thing collapses. Well, ultimately, you run out of greater fools.
After what they are already calling Black Friday, they are counting up the damage on Wall Street tonight.
In the spring of 2000, the stampede reversed
and sent the Dow and the NASDAQ plummeting. It was the worst single-day point loss ever for both exchanges.
We start off with that tech-led sell-off on Wall Street. The Nasdaq sinking over 2.5%, ending the day just shy of its lowest close of the year. And with just one trading day left in Q1, the index is pacing for its worst quarter in nearly 3 years. Every member of the so-called Magnificent Seven was down today, the group losing a combined value of over $500 billion in today's session alone. The S&P Dow and small cap Russell 2000 also sharply lower today, and in March, all firmly down on the year as well. The catalyst behind today's action, more hot inflation data. The Fed's preferred measure of prices coming in slightly above estimates, and the University of Michigan's long-term inflation expectations hitting a 32-year high.
In the end, valuation does count, but it can go on a long time. And when you get a huge number of participants playing with ever increasing sums, it creates its own apparent truth can be for a very considerable period of time. It doesn't go on forever, and whether it has fallout to the whole economy, like it probably did in the late 20s, or whether it's just an isolated industry or sector where the bubble bursts and it really doesn't affect other values, who knows? But 5 or 10 years from now, you will know. Charlie?
Well, I think the reason we use the phrase wretched excess is that there are wretched consequences. If you mix the mathematics of the chain letter or the Ponzi scheme with some legitimate development, like the development of the internet, you are mixing something which is wretched and irrational and has bad consequences with something that has very good consequences. But if you mix raisins with turds, they're still turds.